Good morning, everyone, and welcome to the Daily Hunt for Multibaggers on this brisk Sunday, February 1st, 2026. We've been sifting through a good chunk of data from yesterday, January 31st, to uncover some interesting insights for you.
That's right, Ethan. Our AI flagged several stocks with a noticeable number of social media discussions yesterday. While the overall market sentiment is a bit mixed, leaning towards cautious, we saw some significant spikes in interest, especially around a couple of names we're going to dive into. It's a fascinating mix of perceived opportunity and potential red flags out there.
Absolutely. Let's kick things off with CME Group, ticker symbol CME. We saw a fair bit of discussion around them yesterday. And historically, well, it's a solid player in the derivatives market, often showing a lot of stability with a low beta and pretty remarkable profit margins.
Hold on a minute, Ethan. Stability is one thing, but our analysis picked up overwhelmingly bearish sentiment. Users are absolutely ripping into CME, accusing them of market manipulation with those margin hikes on gold and silver, especially after significant price drops. And while those operating and net profit margins are sky high, we can't ignore the fact that their revenue growth is actually slightly negative. That's a key performance indicator I just can't overlook.
I hear you, Brooke, but margin increases are a standard risk management tool, protecting the exchange. Plus, we did see some insider buying in the last 6 months. Not massive, but it's a vote of confidence from those closest to the company. The upcoming earnings on February 4th could also shed more light.
A marginal purchase, yes, but those high margins are exactly what's under scrutiny when there are accusations of unfair practices. And that PE ratio, over 28, suggests the market has high expectations for future earnings. But with negative revenue growth and intense criticism about their operational ethics, are those expectations realistic or just a setup for disappointment? This stock has consistently been a stay away for us, going back to last November and again just yesterday. It's not showing signs of reversing that trend in terms of public perception.
You're right, the previous ratings are a strong indicator, and the negative sentiment is a significant concern. While the underlying business is undeniably profitable, the market commentary is too strong to ignore.
Precisely. The sustainability of those impressive margins is tied directly to market trust and regulatory environment. If that erodes or if there's any form of regulatory action, those KPIs could definitely take a hit. For now, my metrics suggest extreme caution.
So for CME Group?
It's a stay away for us today. The market sentiment and negative revenue growth are too compelling, despite the high margins.
All right, moving on to our next hot lead, GlobalFoundries, GFS. This one had a huge spike in activity yesterday, with a lot of bullish talk centering on some pretty exciting speculative ideas. We're talking high institutional ownership, a short interest that could set up a squeeze, and whispers of NVIDIA making an investment, because GFS reportedly fabs chips for Grok. Plus, they're making a strategic pivot into AI and robotics chip making, which is a massive growth area.
Whispers and speculative are the keywords there, Ethan. While the idea of NVIDIA involvement is certainly exciting, the financial reality for GFS is quite different. Our KPIs paint a picture of a company facing serious challenges: negative revenue growth, negative net profit margin, and an alarming debt-to-equity ratio of over 14. That's a lot of debt for a company that isn't turning a profit. These are fundamental issues, not just a temporary blip. But the news does indicate they are actively pushing deeper into AI chip making, and analysts are paying attention. The broader chip sector is rallying, and their next earnings call on February 11th is seen as a potential catalyst. What if that NVIDIA speculation actually materializes? That could completely transform those negative KPIs. It could, Ethan, but we need to look at what's concrete today, not just what's possible tomorrow. Many users are pointing out that GFS's technology is outdated and inferior, stuck at 12 nanometer, which isn't suitable for the bleeding-edge AI chips discussed. And frankly, the financial health with persistent unprofitability makes it a very risky bet on a speculative event. The current data simply doesn't support a buy based on performance. This stock hasn't been rated by us before, so this is our first take.
I see your point. The current fundamentals are definitely a concern. However, there's undeniable optimism within the community about that potential NVIDIA connection and the AI pivot, even with the strong counterarguments. It's a battle of hope versus hard numbers. And for me, the numbers speak loudest, especially when they're pointing to negative profitability and high leverage. Until we see a concrete shift in those financial metrics or a confirmed strategic partnership, it remains highly speculative.
So for GlobalFoundries, GFS?
It's a stay away for now. The current poor financial health coupled with the highly speculative nature of the bullish catalysts makes it too risky for an immediate investment.
All right, let's do a quick roundup of today's insights. It's been a very interesting dive in both market sentiment and the underlying numbers.
Indeed, a lot to consider when balancing potential future upside against current financial realities. Investigate as buy? None. Investigate as cautious buy? None. Investigate as speculative gamble? GlobalFoundries, GFS. And that brings us to the end of today's Daily Hunt. This podcast is for informational and entertainment purposes only. The content is generated by artificial intelligence and does not constitute financial advice. Listeners should conduct their own research or consult a licensed financial advisor before making investment decisions. We are not responsible for any losses incurred. The market is a wild place, and knowledge is your best asset. Thanks for tuning in. We'll be back tomorrow with more insights from the ever-evolving world of stocks. Until then, happy hunting.